Good morning, everybody. It's Michael here. Happy New Year to all of you. I hope you had a great time over the Christmas holidays and the New Year. Welcome to a new year, a new decade. I hope you're all ready to go. Quick introduction. Again, thank you to all of you who've been sending me well wishes over the holidays. I thank you for your kind words as always, and I'm pleased to see that the thread is continuing to chug along, and it's actually growing quite well. So thank you to all the new contributors, and for keeping the atmosphere in there supportive and helpful for new people who are coming into the methodology. Today, as always, we're going to go through our usual markets, and we'll take a look at what the markets are offering. Lots has happened, obviously, this year already, and we're only 14 days into it. But I think everyone's now back into the full swing of things. The holidays are very quickly being left behind us, and we're now looking into the new year and the new decade. So quickly, before we look at the charts, I just wanted to give you guys a heads up. As always, I host free webinars from time to time. I'm going to try this year to do one at least every quarter, if not more frequent. So that's what I'm looking to hold myself accountable to do one at least one every 3 months. Probably will be more frequent, maybe every 6 weeks. But I don't want to commit to that just yet. So at least definitely I know I can commit to one every quarter. And those webinars are free, and you can bring your questions. A lot of you have been in contact regarding the courses. I've sent you some information. The website is also up and running, storehouseanalytics.com. So you can always check some of the information out there as well. And of course, just email me if you have any questions. There's a lot more than what's on the free content. Some of you have asked about that. What's different to what's in the free content? Obviously, I'm not going to be unfair to the people who have paid, who have come on the one-to-ones, who've done the video course, because the video course is a 7 series. It's a set of videos where I'm teaching the methodology to one of my mentees, a guy who's now become a very close friend, who started out from knowing nothing really, and became quite a good practitioner of the methodology after our mentoring sessions, and he continues to be mentored by me, and he's doing really well. So if you are interested in the video course, just hit me at storehouseanalytics@gmail.com. If you wanted more intensive, more hands-on training, then obviously come on the one-to-ones. And for those of you who are on top of that, interested in coming onto the round table, which is our weekly meetings, it's a subscription service, you're also welcome to that. All the information is on the website, storehouseanalytics.com. So have a look at that and see what interests you. Any questions you have, just email me about it. Okay, so let's get into the chart. So we're looking at the date for the webinar. I'm looking at the 1st of Feb, which is a Saturday. It'll be 8:30 p.m. as usual, UK time, but 1st of February is the tentative date. So please pencil that into your calendars. And if you're interested, as usual, just email me at storehouseanalytics@gmail.com. That's the email you see on the screen there. Okay, so 1st of February is our date for the webinar, 8:30 p.m. London time. All right, let's get into the charts. So these are the charts we looked at the last time we were together, which was, I believe, about a month ago now. Lots of chocolate and drinks since then, and lots of pounds gained as well. Well, let's look at this now. So we are now looking at updating this chart now, and we have a market that is now clearly in a downtrend, and downside momentum is established. So the dollar is in trouble at the beginning of the decade. So we have all of that. In fact, just let me open that up a bit and draw that more accurately. So we are looking at that. So downside momentum established, demand zone hit, it's rallied up. So this market now has come up. Anyone who's looking to short will be looking for selling opportunities on the bounce now. So looking at this area, it's quite a sloppy area. I don't know if this is the same on your broker, but I have this big wick on mine, which is never a good thing. But that's the level that's made a new low, and there's a big move away from it and all of that. What is not so good about it is that the fact that we have ended downside momentum. And for those of you who are part of the roundtable, you will know that we talked about this at the weekend when we met together and going into the details. And this is what the advantage is of having the mentoring, is that it's well beyond just looking at the charts. I see a lot of us asking questions on the thread, and it's because the foundations haven't been really set. I went through the same journey trying to put all of this together myself until I kept hitting my head against a brick wall and feeling uncomfortable that there was stuff that I was missing that I didn't have the solid foundation for. And that's why I went into mentoring myself. And I'm still mentored. I choose to be. It's a lonely business, trading. For now, the dollar is in trouble. In the short term, there might be possibility for a bounce from the 96.89 to 96.53 area. But longer term, we may just have this market continue to motor down. So going short where we are now is a possibility. It's not ideal because the downside momentum has ended, and there's a new demand zone in here. The conservative ones amongst us will wait to see the quality zones that are created, if any are created up here. And when prices come down here, any bounces may have opportunities to short up in here. You could also buy a bounce. If we break through that area and we go down, even better. Definitely looking for rallies to short at as well. Okay, if we go to the opposite market, which is the euro, you can see the euro has also come into demand and is rallying. These are the levels that we marked from last year. One already hit over the holidays, which was that one there, which was pulled back into, and we went to new highs. This market is a market that's trying to turn. As the dollar is getting into trouble, we would expect that from the euro, that the euro would start to gain strength. And we've seen for sure that the euro has stopped falling, and it's beginning to, it has established actually an uptrend now, going by the supply and demand definition that supply and demand traders would use. Okay, so bear that in mind. The euro is showing strength, so buying in the euro would be the more appropriate action to take. And the shorter time frames, of course, we could always look for selling opportunities as well, but those are likely to be short-lived. So bear that in mind, that we may be seeing a shift in the euro right before our eyes. It'll take time, because remember, this is a big picture time frame, it's a weekly chart, so it may take time for all of that to play out. But for now, we are not on the round table aggressively shorting the euro, at least not on the long-term charts. Going into the Aussie, so the Aussie, we had these levels in from last year. Now let's update our charts and just take those out, and we can clean up and reevaluate where we are now. So the Aussie as well is working off of a demand level, which is quite a wide one without too much of a move away. We got up to the closest supply and we've pulled back, so it has reached an area where we may see some stabilization. There's a little bit more demand also down there. It's a market that's established upside momentum but is yet to definitively change trend. As you can see here, we have higher highs and higher lows. What hasn't happened is we haven't taken out any quality supply yet. So it's a two-way market, this one, for now. Again, it pulled into demand deep into that level, and as you can see, for the short-term income traders, was a really good place to be looking for short-term income. You've had the bounce, and that's worked. Now, some of you have asked about this zone. For the roundtable members, we wouldn't be trading in this zone for a number of reasons that it will take too long for me to explain right now, but it's just to summarize that it is quite I don't want to say risky, but it's not an ideal setup, even though you have a drop-based drop supply zone there. Given the way the big picture is setting out, it's not an ideal location for us to be looking for the short. Could it work? Yes. Does it meet our criteria? No. The pound, as we identified, that demand zone is still holding. We can now remove this one because the supply zone's been traded through. We went as high as, and we are working still off of this previously tested supply. That was the first test. That's the second test. And we have this whole area that was identified, and now we are pulling back into it. So here we are with the potential to buy for short-term income into this demand zone, which is where we've arrived at. The profit margin is not great, but it's short-term income, so going down to really small time frames and looking in here for opportunities is not a bad idea. You will have some sellers to deal with up into this area, so be mindful of that in terms of short-term income. But for now, we are looking at a market that is struggling to maintain that upside momentum. In fact, that's been broken, so it may be a challenge going forward for it to make further headway. We would need to reestablish that upside momentum for us to be able to continue to buy aggressively, which may happen. It's just that it's moved quite far in a short time, relatively short time. So just be mindful of that. Short-term income trading for sure, definitely looking for small time frame entries on the British pound is not a bad idea. And remember, these are just my ideas. I don't expect you to go out and buy because I say so, because I'm not a registered anything. Okay, so bear that in mind. Okay, so looking at the New Zealand US dollar, again dealing with a big, wide, sloppy supply zone. We have this demand zone to cope with. It's not ideal to be shorting right now at all. If anything, we want to be looking for buying opportunities, which have already, if you're trading short term, has already given you a couple of days worth of a bounce. But as you can see, you had this supply area level on top of level to deal with, which is where the buyers would have been a supply and demand buyer. Buying at this demand zone would have been aware of to make sure you take some of your profit off at least, and then wait to see what happens. So definitely looking for buying opportunities in the short term still, and even on the bigger time frames, looking for buying opportunities in here. You might just have to wait a little bit for this downside momentum to end. It's fairly aggressive with the drop-based drops, one after the other, so you might have to be a little bit patient with this one to see if new levels start to form on the daily, or if you're more aggressive, the 4 hour, and then take buying pullbacks to those. Until that happens, I would say this one is a wait and see. And for Bitcoin, so you will recall that I shared a chart on Bitcoin on the thread. I believe I had the picture up. So that was the chart that I shared on the thread a few days ago. This was back in, I believe, 2019 on the thread. And I was saying that we could use that area for short-term income, just like we've been talking about. And you can see what happened to that area right there. Prices did pull back, and look at where we are now. So the levels that the reason we didn't trade these levels, even though we were aware of them and used them as profit target, is because, again, of the way the markets evolved once they were down here. We're always looking at scenarios, always considering scenarios. The higher supply zone worked for short-term income trading to the short side as well, but we didn't take that. I didn't. I know some of the guys did. So now updating our charts, we have demand down in here now. We now have a new demand zone also in here. I would say we still have some In fact, let me do this. Let me put this in a circle. This will be a demand zone when we have closed this candle, and whether it's tradable or not will still be determined by a few things yet. It's not yet something I would be watching to buy if we pulled back today, for example. No way. So just be mindful of that. Short-term income, still short-term income. There's even more demand just below that as well. Okay, now looking on the big picture, going back to this level again, let's take a look at where we are. So we have the demand below still. The supply is still working. We now have new supply as well. We can update that. There's new supply coming up into this area. So watch that. Watch this area up here. It's a bit sloppy, but watch that area up in there for longer term income going on the short side. Okay, let's take a look at the S&P, and it's a market that keeps on giving, with the drums of war beginning to quieten down. It's which is always a good thing. We are still motoring on higher, and demand zones are still holding. We had the short-term income trade off of the supply that we marked off in blue, and now we see that it came down into the demand zone down there, and we've continued higher. So let's update the chart. We have demand zones there. That demand zone's been traded through. So there's nothing quality right now until here. For demand, there's more demand also in this area. Let me get that one. There's more demand in that area. Watch this area up here. Again, it's not evolved completely yet, so I won't mark it, but watch that area for possible demand zone to be created. All right. There's no supply above us. These are all-time highs, so bear that in mind. Shorting has been a very painful experience for people who've tried to short in this market. Some of the other indices around the world have been better shorts than the US markets, I'll tell you that. And the Russell 2000, again, not really much happening. Hasn't hit its supply yet. It's still holding demand levels. So nothing really exciting happening in this market. It's a no trade for now. And the 10-year, so the levels in here that were marked continue to, did we mark a level in blue on a smaller time frame? Right, so we marked these two levels, and you will see the lower one. This is what the scenario we would term a level on top of level, and there's a particular way to trade that which the roundtable members are taught, and so that the roundtable guys would know that we would have been looking at getting out just before that level. This level was previously tested, so we didn't trade this one. I didn't for sure. I'm not sure if any of the other guys did. But we are stuck in a range in this market. It's bouncing off of demand below us, and the supply above is still holding. So let's update the charts as is, and we have a supply zone also being created. Not quite there yet, but keep it on your charts. It may be something you want to revisit. All right. Definitely not looking to buy this demand zone. Definitely not, because of the way the big picture is panning out. But if we're going to be looking for buys, we have the demand here, down here, that's holding. You may also want to look down in here on smaller time frames, see if there's anything of quality down into this 128.20 to 128 area. All right. The US dollar Canadian, let's go back to the daily on this one. So the US dollar Canadian, very, very, very sloppy. We are trying to get some movement out of this box range that we talked about previously, but it's just not quality enough. So at least let's clean up the charts. There's nothing to do right now in this market. Waiting and seeing how the markets evolve. This is not. There isn't a lot of quality in this area. You may wish to use it as a short-term income level, though, that you may be able to get off trades on smaller time frames in that area. So for the short-term income traders amongst us, that's an area you may want to keep an eye on. Let's go look at what's below us in here. So this is really interesting. So there's nothing really of quality that is likely to cause a significant move in price until around there. So if this downtrend continues, we're looking to be able to get all the way down to there. Over time, it's not going to happen all at once. If it doesn't continue, you will see it by the removal of this level. If this level holds, then eventually we're looking at getting down to here. If it doesn't hold and this level is broken, then we can reevaluate and look for shorting opportunities further up. Okay. US dollar Japanese. Okay, so all these areas that we marked off did work. Even that one, depending on where your stop was, you may have been able to. I wouldn't have taken that long. The short, definitely we did, so that worked out nice. And here we are. The guys made some good money on this one. We are still now we're looking at momentum to the upside, which has been reestablished. All right, so going long in this market, now we will be looking at this area. You may wish to clean up this area on a smaller time frame. I'm just going to draw it in to bring it to your attention. So keep an eye on that level. Keep an eye on that level. Okay, so that's the area we will be looking at. And there may be other areas here on the intraday time frames as well, but for now, keep an eye on this whole area. In fact, I would watch this whole entire area on this time frame and a smaller time frame, just to be sure. So do a deeper analysis into this area. Okay, I'm moving a bit quickly because I don't have a lot of time, and I'm always wary about making the videos too long, because for some of us, I know the attention spans may not be as high, and there's no need to make them too long. These are just supposed to whet your appetite and get you thinking about the trades. Yeah, so that's the US dollar Singapore. For those of us who trade it, I trade it. So that's the area that I'm very, very interested in. I really like this area for a whole load of reasons. I really like that area. So I will be watching it. Because I like it doesn't mean I'm going to automatically trade it. I will always observe the market and see how it plays out. But for now, that's an area on my radar for sure. Yeah, so this market could get some traction in here. For now, it's not aggressively being sold. It's slowing down a little bit. So just be mindful of that. Part of the reason why I'm saying I'm still going to watch, even though I like this area, I'm still going to watch how it returns to it, because I'm seeing a slowing down in the market. Okay. Now, crude oil needs updating as well. So let's update crude oil. We have two big levels up here. Just going to combine the both of them. And then we'll go down to a smaller time frame and take a look. So we've had that trade happen. Again, some of the guys took this trade. I believe that was on the other market, but I think some of them took this one. I didn't. I just can't take every opportunity really. So we have the markets pulling back down. It's not the greatest move yet. We are still overall in a range, with the top of the range still set and the bottom of the range definitely set. So we're kind of in no man's land right now. So buying would be probably best closer down to these levels at 54.85-ish, maybe 55.80, around there, but nothing to do just yet. Okay. And silver and the other metal markets obviously have been quite strong. I at the beginning of the year. Let's update this chart now. So silver is quite messy, not in a location that we would be interested in buying it. If we were keen on buying silver, we would look down into this area here. This is where I would be interested in considering silver as a buy. Obviously, if it came back down in here, even better. Yeah, those are the two levels I would watch. This one and all this area here. Okay, let's look at gold. So, if some of you remember, we talked about where I wanted to buy gold. Guess what? It was good. It still is good. It still is good, so thank goodness for that. Updating the charts now, that's a new level to consider. It's a bit high. Keep an eye on it, maybe use it for short-term income, but really the level the roundtable members and I are focusing on is that one. We are seeing supply being formed also in here, so be mindful, you will have sellers in this area. Okay, so buying here is a little bit more tricky. I'd much prefer here, but we'll see what the markets give us. There has been some aggressive selling coming into it. If we take a look, it's a level that I believe we've talked about in here a few times already, that level of supply, and we've marked off, or maybe I posted it on the thread, those two levels that we were looking at, and that one's coming out of it really nicely and beginning to form supply as well as it's going out. So if we get a bigger move from here, this could actually be a shorting opportunity in gold in the short term, for short-term income. I do emphasize that. And now looking at the Turkish market. So we were looking, when we last met, we were looking at this level, and I was saying that this level is even better because we were hitting into this supply on the weekly chart at that time. Now that upper level worked a treat. It worked a treat. If anyone took it, congratulations on that trade for sure. And we've since had other levels continue to work, which I hope some of you did manage to get in on. And this market just continued to rocket higher. Let's take a look at it on the big picture and see where we're at. So we're close to all-time highs. We do have some supply to get through. I'm just going to combine the whole area. But demand zones are working. They're working quite well. So again, it'll be, given the way the world indices are, it'll be quite an aggressive trade to short this market. Not impossible, but I would suggest waiting for at least some evidence of selling coming into the market before we consider a short. It's not in an ideal location for a buy either. So this one is now officially in a wait and see mode, how it evolves. Okay. All right, so that's all I've got for this week's video. I hope it was fun and it made sense to you guys. Again, these are just to get you thinking about the levels and your processes. And I hope you find the material useful. Again, if you wanted to contact me, if you had any questions or you're having trouble with the website and you're not clear about the offers on there, storehouseanalytics.com. Just email me at storehouseanalytics@gmail.com. And thank you again to all of you for continuing to share your ideas on the thread. Let me know how you're doing. Email me and tell me if it's beneficial, if you think it's something that should be continued. I'm talking about the videos and the thread. Give me some feedback. Okay. Again, a reminder for the 1st of February, for those of you interested in attending the free webinar, just email me again with your contact details so you can be put on the list, so you can get a link for the webinar, which we're looking at the 1st of February. All right, guys, have a great week. Trade well, trade safe. We'll speak soon. Take care now.